Søren, CEO of Columbus, you just released your 2023 results. It looks to me Q4 momentum continued, and you actually surpassed your organic growth expectation. What went better than expected?
Yeah, I think overall we were quite satisfied with the year. We had pretty good growth throughout the year, and then as you correctly point out, we saw increased momentum in Q4. Q4 was the increase in momentum was very much driven by our M3 business unit, where we picked up a lot of velocity. And in terms of the whole year, I think we continued to improve our win rate. So the work that we bid for, we have a very high win rate, both with existing and new customers. And we have a good understanding of our own focus. We know exactly which industry verticals to go for. We know which customer profiles. So it's very clear to us when to bid and when not to bid. And when we bid, we win a lot.
And then let's look into the other side of the coin in a financial report. The margins, despite you increasing your efficiency, the most important KPI for consultancy, it looked like you ended up a little bit in the low end on your margin guidance. Did you invest in growth? Was that the reason?
We did invest in growth. So we invested a lot in the build out of our security offering, and we continue to do so. We see it as an important thing for our future servicing of customers. And we also saw great growth from our units CXE, which is sort of the customer experience side, and also data and analytics grew fast. When smaller units grow very fast, we tend to not see quite the contribution margin yet that we will, but they actually have a reasonable contribution margin, but they're not at full maturity level yet, I would say.
No. So let's look into 24 and of course, it looks like you're guiding for quite a margin expansion in that year, and it's the first year in your new strategy period where you want to double those margins. So how would you describe that start to that, and what is driving those margins expansions?
Yeah. So focusing on the margin. We have this plan to more or less double our margin by 26, financial year of 26, and that journey obviously has to start now. There are a number of contributors to that, which in some sense have already started to kick in, and that we will need to follow up on very, very closely. It's driven by efficiency again, so we need a high level of efficiency. We need to work for the right customers. We need to make even better use of our service centers in Poland, in Chile, in the Czech Republic, and in India. And we are also rebalancing our organization somewhat. We have a very, very senior-heavy organization. We want to actually continue as a senior-heavy organization, but we need to rebalance the shape of the company to some extent, which also has a positive effect on margins.
Strong momentum in 23, is that continuing into 24?
Yes, I would say we do certainly see a full carryover of the momentum we saw in Q4. Especially we're very happy about this stronger performance of our M3 business unit going into the new year.